Bitcoin is bouncing off its lows. We've seen massive buying in the last hour alone. ETH 2.0, sorry, I'll try that again. ETH 2.0 staking is live on Abra. How does this work? How is it different from earning yield on Ethereum today? The crypto contagion caused by Abra's competitors seems to be over. What does that mean for your crypto holdings and why we believe everyone should be using this opportunity to move over to Abra? All this and our AAA, Ask Abra Anything. It's time for Money Talks. All right, let's do this. All right. Good morning, good afternoon, good evening, good night, wherever you are. I know we've got folks from all around the world watching as we do every week on Money Talks. Hopefully, you're all doing well. I have a bunch of stuff we want to talk to you about today. We're going to bring on the Abra team. We've got some product updates. We've got some market updates, some crazy stuff happening in the crypto markets in the last couple of hours. Of course, I'd be remiss if I didn't send out a heartfelt wishes to the people of Japan on the tragedy that's happened there in the last several hours. Absolutely terrible what's happened to the former prime minister, and so we wish his family nothing but peace, and we're really sorry. I know we have many of you here from Japan watching. And our hearts go out to all of you for this tragedy. And I hope this is a one-time isolated thing, and it becomes a distant memory soon. Okay, so let's talk about crypto. We've got some interesting things happening in the markets the last couple of days. I'm gonna bring up some charts here. I'm gonna go back to charts. I haven't done that in a while. Some folks have been asking why. Apparently, some of you actually like the charts, so let's take a look here. All right, so I'm going to start out with the weekly chart going back pretty much 10 years, and you can see we've been on the log chart on this upward channel, and we've been 2 standard deviations or close to it before. Once in 2015, and obviously once again at the beginning of COVID. Both times we obviously bounced from there higher. Now, in the case of 2015, it was a kind of a steady march higher from, let's see, about 230 to about 1,000, right? So 4x move, but still 1 standard deviation below kind of this, not really mean, but let's just say middle of the channel. And of course, from March of 20 at 4,000 Bitcoin, we did a steady march, as we all know, up to close to 65 to 70,000 Bitcoin. Now we are bouncing around that 2 standard deviations below the middle of that channel. And if we were to get back to the middle of the channel by, let's say, this time next year, Bitcoin would be at right around 200,000. Yeah, you heard that right, 200,000. So again, things look very different on a log chart versus on a standard kind of base 10 line chart. So that's the weekly. Now let's go dig in a little bit. We zoom in, and we can see here that we have been bouncing a little bit off these lows, but we're still kind of in that kind of low area. For me, because I think in exponential terms, when it comes to crypto, really not much difference to me between 18 and 21,000. Really, what we're really trying to do is paint a picture of, is this kind of contagion that may have been caused by the crypto markets combined with equity markets? Is it all in the past, or is there more pain to come? And the answer, of course, is we don't know. I do think that we are in a recession. If you haven't listened to Kathy Wood's most recent podcast, it's called FYI. Go to her webpage on ARC and listen to it. It is absolutely fantastic. She is the master, and she does a really good job of laying out her case as to why we're in recession now, why a slowdown in the economy is probably a good thing, because it would force the Fed to lower their tapering sooner, which is what she thinks is going to happen. It's also Raoul Pal's base case. And I'll have some news about Raoul in a few minutes. But go ahead and listen to her most recent podcast. So let's zoom in onto the 4 hour, and we can see, we've had a pretty nice run the last 4 or 5 days, from 19,000 to about 22,000. But things get more interesting here if we come in here for the last couple of hours. Look at this buying spike that ended a few minutes ago. The last 2 hours saw unprecedented buying of Bitcoin. It caused a short-term spike. And of course, the price came down as one might expect when the buying stopped a few minutes ago. But I've never seen a volume spike, at least in recent memory, a relative volume spike like what we saw in the last couple of hours. No idea what was causing it. Clearly not a one-time thing, since it was spread out over a couple of hours, meaning there were lots of orders involved. Couldn't have been just one order. It could have been a good until canceled order, which was getting partial fills. We don't know. But very, very interesting. I'm sure some folks in the news will figure this out and speculate on it. The bottom line is that over the last, like I said, 10 days or so, we've bounced pretty hard off of the lows here from July 4th, around 19,000, right up to underneath 22,000. We did pass 22,000. Ethereum, as is usually the case, has bounced harder, lows of 1,000 up to about 1,250. So that's a solid 20+% gain off of the lows. Okay, so super interesting what's going on there. I'm happy to get into that in the Q&A section if there's other news. We're obviously going to talk about risk and risk management and everything going on there. Everybody all of a sudden wants to talk about my favorite topic from the last few years, which is obviously risk management. And it's something that I've been talking about for the better part of 3 years now. And it's interesting that the rest of the market seems to be catching up with us on this topic. So we're going to get into our operational updates there. I want to give you, just a perspective on how we look at risk at Abra. I need to remind you, the entire team at Abra is here. We want to be your trusted partner for all things crypto. Many of you have been moving funds from other services over to Abra, and many of you have been testing our withdrawal processes and then redepositing just to know that you have access to your funds. In every case, we're here for you, and we appreciate all of the outreach. And it pains us, and I'll address head on the turmoil in the market and the news regarding Celsius, Voyager, BlockFi. We've experienced incredible growth at Abra as a company, and I have great conviction for the future of crypto. But we also, as I've said many times, know that crypto is subject to extreme volatility, and you don't need to take on significant leverage either as a consumer or as a business to experience and take part in that growth that comes along with the volatility. And we all know now what the downside risks are of excessive volatility. But having a partner like Abra that's financially secure, has sound risk management practices, and has personalized service for every private client is absolutely essential. So that's why I think Abra is considered by many to be the best company for helping you manage your crypto wealth. We have rigorous credit underwriting, risk management, trading policies. I want to talk more about this. Our yield and lending operations are in a strong position with no losses suffered. You've all heard me talk about our risk policies for the past 2+ years. It's this commitment to excellence that has enabled our rapid growth in a safe and responsible manner. Yes, it is possible to run a C5 business that grows in a safe and responsible manner. We're doing it here at Abra. We're also aware, as I said, of the issues facing our competitors. It does pain me to see this happening. Abra has no exposure whatsoever to these companies, and Abra has no relationship whatsoever with them. Our rigorous underwriting standards and risk management practices are protecting our funds, including my own funds. In short, Abra is still open for business. We're thriving, and we're here for you anytime. You can reach out to us via live chat in the app. There's an 800 number you can call, which is accessible for our US clients. In some instances, you can get a call back. The team is here for you. It's a fantastic support team. Our operations team, all basically, working their butts off to continue to serve your needs. All right, let's talk for a moment about risk management, and this is a big deal to me. So I hope you'll just give me and bear with me for a minute while I just give you an update on how we look at risk management at Abra. All right. So there's two perspectives on managing risk for generating yield as a CFI company. The first, of course, has to do with traditional lending, which is often how yield is generated in our space. And the second has to do with DeFi. And I'll talk about both. And DeFi is a big deal right now because we're going to be offering more and more DeFi services to you directly. And we want you to understand how all this works. So in the lending world, we basically run a team that does nothing but focus on risk management. Now, it may not be clear to many of you what risk management actually means. At its core, risk management basically says, what are the practices that your company is undertaking to protect the funds that you're helping to either oversee, lend, generate yield on, invest, or whatever the appropriate term might be for the business that you're in. So in the case of Abra, we've partnered with Prime Trust, a trust bank based in the US, to be able to offer a yield for crypto deposits. And as such, Abra manages the process on their behalf of generating that yield. And we have several different forms of risk oversight that we do at the same time. And we have a committee of folks, which I sit on, that overlooks and oversees these risk processes. Everything from credit risk, market risk, liquidity risk, duration risk, borrower concentration risk. And I think you can see here on the screen an overview of what some of these mean. And concentration risk is probably the one that should be most concerning to folks from what I've seen in the market right now, where it appears that several of our competitors have massive exposure, way too high exposure to one or two borrowers that could bring down the entire company. And duration risk means if you have, via Abra's terms of service, 7-day access to your funds, how long is the average loan that Abra is doing, right? Because if the average loan is 6 months, then there's no way that we can give all of you 7-day access to your funds. So we manage the blended duration that is in line with your access to funds. And so then there's liquidity risk. And as I mentioned, market risk. We have a very rigorous underwriting process that people go through, not only the companies, but the owners of companies themselves. Then on the other side, there's also DeFi. As you all know, we not only use lending, but a certain amount of DeFi to generate yield. I think that Abra has the best processes for managing risk in the DeFi space. This is why we've suffered no significant losses at all in the DeFi world. Remember Anchor and Luna, Abra suffered no losses there. We've looked at so many different DeFi opportunities, and it's been very successful for us, but it's extremely complex and difficult to manage. And I would not recommend direct DeFi investing at scale for most users. Some of you, I think, can handle it, but many of you probably should use curated services and models like Abra's, or look at things like staking, which we'll be talking about in a few minutes. But these are the different types of risks that are associated with DeFi that Abra helps to manage, from smart contract risk, meaning how does the code work, governance risk, economic risk, operational risk, trading risk, and the list goes on and on and on. So Abra has built processes for both lending and DeFi risk In many cases, it's shared resources. In many cases, it's dedicated resources to DeFi versus lending. Okay. In any instance, Abra has, I believe, the best risk management processes in the crypto space. It's why we have a fantastic operation that has a strong balance sheet, growing customer base, growing assets under management with our partnership with Prime Trust, and why we will continue, I think, to be the gold standard in the crypto CeFi world. Okay. So that's my take on risk, and I'm happy to answer questions on that in the AAA as always. And I'll keep talking about this until until I can't talk about it anymore. And it's a big deal to me, and I know it's a big deal to many of you. All right, so let's see. So I wanted to talk about staking versus lending for a few moments. So we'll talk about this when Deepak and Tanner join us in more detail, I'm sure. But if you update your Abra app, you'll see that we now have staking available for Ethereum 2.0. And so for many of you, this might be a new concept. So let me just take a minute and explain what staking and proof of stake means. Let me share my screen here. And you'll see that some differences here between proof of work and proof of stake. So proof of work is what you know in Bitcoin and Ethereum today. Proof of work was invented to actually for email spam years and years ago before Bitcoin by Adam Back. And the idea was basically integrated into the Bitcoin blockchain model for using for having a distributed, decentralized consensus mechanism. In English, that means how do we determine whether transactions are valid and which transactions to insert into the blockchain. And it uses this idea of mining for proof of work. All right. And miners are basically playing a game against each other where they try to solve this puzzle, which gets harder and harder the more computers and more CPUs are trying to solve the puzzle. Which is why the energy consumption for proof of work goes up and up and up over time, and why the hardware expense can go up over time, because the more people that are playing the game, the more they want to have an advantage by having more powerful hardware and obviously using more energy. Now, proof of stake, in theory, is a much more scalable solution for consensus because it uses much less energy and is also based upon a much smaller concentrated group of effectively computers. And it uses a deterministic selection process to basically decide who is going to validate a transaction at any given time. So basically you stake crypto, in this case Ethereum, into a validator, and the validator can then be chosen to publish the next block, and which is more or less what the miner does once they're chosen by winning the current round in the game. And as a result, the initial investment is not so much in hardware or the ongoing investment is also not so much energy as it is the investment in the stake itself. And at that point, your incentive, and let me just show you here what I think some of the differences are on the incentive front. But the incentive for proof of stake is basically to have the value of the staked crypto to increase. Stakers want upgrades to the network that help grow the value of their Ethereum or other coins that may use a proof of stake model. So they have incentives to hold their coin reward, to earn more stake reward, yes, but also to drive up the value via upgrades to the capabilities of the network and scalability of the network. Okay, and there, as I said, stakeholders are rewarded by being chosen based upon the size of their stake, which gives them a mathematically higher chance of being chosen to validate a current transaction. Okay, so whereas miners, on the other hand, their incentive is to sell the coin reward to buy more hardware in order to keep growing and earn more Bitcoin over time and drive up the value of the Bitcoin that they have. And they simply want to continue to earn more mining rewards and transaction fees over time. And so the incentives are somewhat aligned, slightly different for proof of work, proof of stake. Both want the value of the underlying coins to go up, but they see that underlying value happening via different mechanisms. Okay. All right. So, as you probably know by now, if you upgrade your Abra app to the latest version, you will now see in Abra Earn a second way of earning yield on Ethereum. So we have the standard model for earning yield, which is, I believe, paying out at about 2.6 or 2.7% interest rates. And that gives you the standard 1 to 7 day access to withdraw your Ethereum. And that is not going to change. And that rate will be variable, just like it always has been. And of course, now we have Ethereum staking, which pays out, I believe the rate today is 4%. My guess is that rate will go up once the merge happens. And I wouldn't be surprised to see that rate spike. Not a prediction or not investment advice, but just by personal prediction, I guess is the way to say it. And the biggest difference, though, is that once you stake with Ethereum, your Ethereum is locked, and it's probably going to be locked until about a year after the merge happens, which could mean late 2023 or early 2024. And so I'll be moving my Ethereum over soon to the ETH 2.0 staking because the rates are higher, and it's also a very safe model for earning yield. Okay, so for those of you who also have concerns about earning yield in a CeFi model, you have an option now to do that via staking, where there's no lending involved whatsoever. Okay, all right, so that is staking. And as I said, happy to get into that in the Q&A. So tee up your questions. So let's use that as a segue. We've got some other product updates that I want to talk about, but let's bring on Deepak and Tanner to do that. Hey guys, you there? All right, right on. There they are. Good morning, guys.
Morning.
Good morning.
How y'all doing?
Good. How are you?
Good. How are you doing?
I'm doing good. So welcome. So Deepak, we'll start with you. So we just talked about staking. I know we have that and some other upgrades that we hinted at last week. You want to fill us in?
Yeah, that was, I think, I can't remember in recent memory that clear an explanation about staking. So that was great. Thank you, Bill. But essentially, what you're going to see in the app, exactly what Bill just mentioned, is that you're going to see another asset in Abra Earn alongside your interest earning ETH. We call it ETH2. But again, just to reiterate, it doesn't go through our standard lending process. It's a direct interaction with the DeFi protocol or the network here, in this case, Ethereum, where it gets staked directly into the Ethereum network. And, like Bill said, there's a lockup period. Lockup period, what that really means, we don't lock anything up. It's just basically the function of the network. Once the merge happens, there's going to be some delay, and after a delay, probably up to a year, your ETH gets freed up. So that's the idea, and hopefully we will launch more staked assets in the future, so you can directly interact with DeFi again through Abra, which means that you don't have to worry about any key management, maintaining your own wallet. You basically, you tap two buttons and you've just interacted with DeFi directly through Abra, obviously. So that's exciting. 4% as it stands today, which is way more than 2.65%, which is on the interest earning ETH. Outside of that, payments. Yeah. So we talked a little bit about this last week. And so what you're going to see is especially for international users, you're going to be seeing, if you've ever bought BTC in Abra using your credit card, you would know that it used to be a pain. We would show you a wallet address. You would have to copy the wallet address, and you would go buy with Simplex, and then you have to paste the wallet address, and then basically get the BTC. And the other thing to note is that you could only do so with BTC. And so with this new launch, what we're introducing is essentially you could buy any of the 130 plus currencies that we support, assets, I should say, that we support on Abra, not just BTC. It probably is going to be refreshing to many of you who've used this before, that you don't have to anymore copy paste anything. We keep the address on the back end. We know what address it is, and as soon as you buy, we basically going to deposit that asset into your wallet address. And so very seamless, which is great. And in addition to that, we are also introducing a bunch of different payment methods for international users. And there are many payment methods that we introduced, but the main ones are SEPA, so forth, faster payments, Ideal, Interact, Poly, NPP, and PIX. I don't know, Bill, you probably know better what countries they map to. But these are just the top payment methods that we introduced. But I think we have, I guess, 7 or 8 methods that we introduced, yep, and more 5+ in the pipeline. But really great value for international users in Europe and Canada and so on. Bill, do you want to add anything to that?
Yeah, sure. So on the country support that you mentioned, I can tell you Interact. I have a tweet here I can show, but we've got, let's see, we've got Interact, which is Canada, which I'm really excited about, because there's several folks in the live stream here that are from Canada. We should have folks identify where they're from again. We used to do that all the time. I think people have kind of gotten used to it here, but we should definitely do that. Let me, where's my Twitter feed? So we've got Faster Pay, which is the UK. We've got SEPA, which obviously is all of Europe, which is awesome. And let's see what else we've got. So forth is Germany and Austria and a few other European countries. And we've got Ideal, Netherlands, NPP, which is Australia, Poly, which is Australia, and New Zealand. And I can tell you one of the actually, here it is. Let me share this. You can kind of see, and you should, if you're not following us on Twitter, this is from my feed, but you can also, wrong share here. That's you guys talking. So I don't know why it's bringing up the wrong share, but let's try this one. There we go. All right. So you guys should be following us on Twitter so that you can get these updates in real time. Both myself and Abra, I'm pretty good at publishing updates. So hopefully you're following, and also subscribe. Don't forget to hit the subscribe button on the YouTube feed and get your friends to do the same. It lets us know that you're actually super interested in what we're doing on Money Talks. Okay, so enough of that. All right, so that's, so we do have a couple of questions here about supporting other countries. Maybe we'll address that first. People asking about India. Are we going to support more banks in the Philippines? Are we going to have, anyway, so maybe we start with those. Do you have any insights there? If there's more
not specifically, unfortunately. I can find out more details, but I know that there are more payment methods coming pretty soon. I'm not sure which countries they map to. It's just our teams work way too fast for me to keep up. But I can probably, for the next Money Talk, we can get more details around that.
Okay.
Sure.
Okay, sounds good. And some other questions here. Let's see. All the standard CPERCS questions on what's going on there. I don't know, Tanner, are there any other burning questions that you guys are hearing?
The questions around CPERCS, of course, are still continue to be a big volume, and we continue to keep you informed right here on Money Talks, and are happy to answer any questions with support as well. Unfortunately, we don't have any big material updates at this time, but yeah, team's certainly hard at work, and again, just really focusing on emphasizing the need to improve utility and create a healthy market is really what is our North Star right now.
Yep, for sure. What are the other questions you guys are getting? Anything burning right now?
I see there's a couple questions around Hawaii in the chat. We have been getting questions around that as well, and questions around Prime Trust. So can you elaborate on one of the questions was, can you elaborate on how our partnership with Prime Trust does not expose us to concentration risk? I'll let Bill probably take this one, but at a high level, I think we work with Prime Trust not as a lending partner, so it's not really a concentration risk for us on that. But Bill, if you have anything else to ask.
Yeah, sure. We are responsible for generating the yield that Prime Trust then pays out to consumers. So Prime Trust doesn't address concentration risk; they address legal risk because they make it legal to pay the yield. It's on Abra vis-a-vis the risk management processes that I spoke about earlier today on Money Talks that eliminate the concentration risk that I think Rob is his name, Rob was alluding to in his question. And our risk processes don't allow for Abra to have any meaningful blended net concentration risk to a borrower that would risk bringing the system down. It's just not something that we would be willing to do. And so the answer is extremely simple. We just, I'm not willing to do it with my money, and my money's in there. And I'm certainly not therefore willing to do it with your money, and neither is the team. So it's just not something that we're willing to do. Even if somebody came to us and said, "Hey, give us all your money and we'll give you collateral, we'll pay you a massive interest rate," we still wouldn't do it. It's not something that makes sense in any way whatsoever. Let's see. So we've got some other questions here. When will we have access on the web? You want to talk about that, Deepak? What's going on with Abra Web?
Yeah, we're close. The team has been working really hard. We are right now. I can say that we are in the last quarter of it. So things have been shaping along really well. We just have to make sure that the timing of the web also has to time with the trading infrastructure improvements that we've been talking about for a long time now, where, basically for those of you who haven't kept up, the trading structure or the infrastructure that we have right now was set up in its current shape or form about 3 to 4 years ago. And we've got to a point in scale where it was very, very limiting to us. And the way that would manifest to the users is essentially not the best rates, higher spreads, in some cases not very deep liquidity, and so on. So we identified an opportunity to fundamentally upgrade our trading infrastructure that then gives you the lowest prices in the market, deepest liquidity, and pretty close to zero spreads, and very, very fast executions. And so that has to be done as a prerequisite to the retail web. And so therefore there's a dependency there. And we want to make sure that once the trading infrastructure has been upgraded and you guys are benefiting from that infrastructure upgrade on your apps, we have to make sure that that works seamlessly with the web. that we're working on. So anyway, long story short, there are a bunch of things that critical things that we have to really be thoughtful and careful about before we launch it. But I can assure you that when we do so, it's going to be an amazing experience. And for those of you who haven't kept up, again, this is not just Abra as you see in your apps, just appearing on the web. This is more than that. This is our view of what would Abra look like if we were to start over. So entirely new design language, entirely new, well, I wouldn't say entirely new, but significantly new brand aesthetics, and experience as well. And in many cases, and I would say, about 60 to 70% of the experience, the flow, has been overhauled. And this is a lot of user testing and research has gone into it. And I believe, it's going to be a lot more pleasant to use. Our apps are fantastic. But I'm sure when you experience our web application, you're going to see a step up in what we can do.
Absolutely. I'm really excited about it. So a couple other questions. Fantastic overview on the web answer. I remain like crazy excited about it. So I can't wait. So Tanner, from folks asking, how do we upgrade the Abra app to be able to see Ethereum 2.0 staking?
Yeah, so updating the app, depending on if you have iOS or Android, you can just do so from right within like the App Store. You just go to the update section, update the app, and then you should be off and running. If you experience any issues, again, support's here to help out. We're 24/7, 365, and have a toll-free number as well. So you can call us at 877-2GO-ABRA, Monday through Friday from 6 a.m. to 6 p.m. Pacific time for US users.
Yep. Any updates on the Abra card? I guess that refers to the Abra crypto card that we announced with American Express. So what's the latest there? I know we've had thousands of people register to get online to get the card.
Yeah. The wait list is still very active. We're getting to the tune of thousands of waitlist members every month. And it hasn't stopped. Obviously, there was a spike just when the PR happened. But there's a lot of interest. It's very clear to us. And on the update side, we still, I'm sorry about that. I just a call that I got, but the team is still very much hard at work. Our objective is to make it look like a very simple product, but it really isn't. There are many vendors, many parties involved, and many different infrastructure service providers involved as well. And so it's a complex thing, but we are still on track for a Q4 release, Q4 launch. We'll see. We're trying very hard, but again, as it is with everything that we do here at Abra, the idea is not to get something to you ASAP. The idea is to get something that is perfect to you, even if it takes a little bit more time. So, things are on track. I hope to have a material update soon for you, but a Q4 launch seems very likely at this point.
Great. Okay. So there's a couple of folks asking about using toll-free number via support. Is it something they see if they go to the support section in the app? Is the toll-free number listed there, or is there an easier way? I guess support can just publish it here. I'm not sure if that's something that they want to do, but they can certainly just go to the support section in the app and they'll find it, right?
Yep. Click on the menu in the top left, click Get Support. That opens up a web browser on your device, and then you'll see the option to either start a chat or give us a call. Phone numbers listed right there at support.abra.com.
Got it. Okay, so I've got a few questions here on lending and risk that I'm going to address. Eric asked, I heard Caitlin Long is well known in the crypto space, CEO of Custodia Bank, said that there's an over collateralized loan, and then by definition, another party is under collateralized. I'm not understanding this if true. So Eric, I think what the point Caitlin is making is that when there is different forms of collateral being used in a lending system, it is often the case that people are reusing collateral, not a consumer, but usually an institution. So, for example, it's often the case in the equities world that if you want to short a stock, you're actually borrowing the stock from a prime broker. Okay, so E-Trade would borrow the stock, let's say, from Morgan Stanley, and then short it on your behalf, or they could borrow it from themselves if they have enough of those shares in custody. Okay, the problem is that people who borrow the shares often then lend them to someone else. And this is a form of what we call in the industry rehypothecation. Doesn't matter, it's a fancy term. It just means relending the same assets over and over again. And so the problem with that then becomes who holds the original asset. And so part of our risk management processes are digging in to these practices at our borrowers to limit the impact and if possible, eliminate the impact of this. The classic example in the 1990s was this company, Long-Term Capital Management, which it turns out was everybody on Wall Street's biggest customer, and nobody knew it because they managed to hide it until it was too late. And they were basically borrowing and lending the same things over and over again to leverage themselves. And before you knew it, it almost brought down the system until and they shut it down and everybody was bailed out by us. All right. So that's something that we work very hard to make sure does not happen, at least in our customer base and our borrower base. So hopefully that makes sense. If that's not part of the answer that you're looking for, let me know. There was another lending question, and then I want to address, there's a bunch of stuff going on with Tether I want to talk about, but there was another question. I don't remember now. I'll look for it. But so I'm getting a few questions on Tether. Let me address that. And I got a couple of questions on CPERX and Bittrex I'll address as well. So let's see. The first is, what is the difference between USDT and TUSD? Okay, Tether is USDT. Trust token, is TUSD. Excuse me. So they're just different stable coins. TUSD is US based, meaning Trust Token is a US company that manages reserves in a US bank. USDT or Tether, I believe, is a Panama based company, and they manage their cash and cash equivalents via an offshore bank. But they also publish attestations of their audits to the New York Department of Financial Services via a settlement agreement they did with them a few years ago. So even though they're not a U.S. company, they do answer in some way to a couple of U.S. regulators, is my understanding. That's the difference. We support USDT. We support USDC, which is Circle's version, which is very similar to USDT, also based in the U.S. And then we also support Tether. The rates on Tether have been very high lately. We're now paying, I believe, 10% on Tether deposits. This is the first time we've seen a significant difference between the rates paid on Tether versus other stablecoins. This is because the demand for Tether has been very, very high. And as a result, we've been able to command much higher interest rates, which we pass on to you. And somebody else asked me this in the chat session, or in the chat threads. What is my take on what the market is hearing about the stability of Tether? And is it true that institutions are shorting Tether on the fear that it may collapse or depeg versus other stablecoins? So it is true that there are institutions that have concerns about Tether. And when we look at it, we don't share those concerns. that's that's their problem if they choose to short Tether. It does appear that the organization behind Tether has the reserves in place that they claim they have, at least up until now, and that they're getting more transparent over time. They're getting better at their communications. And so while Tether is not the default option at Abra, if you deposit cash, today you get TUSD, and I believe in the future you'll also have the option for USDC. We don't have an issue per se with Tether, and I don't really believe that these shorts are actually going to be successful. I think they're looking at what we would call asymmetric bets, which is a very small bet leading to a massive return relative to the size of a hedge fund, of course, which is often very large. So again, they may not really put huge likelihood of that bet paying off, but they see the risk reward of making a small bet on Tether collapsing as having a massive payout. Personally, I don't see it. Okay, so and then somebody also asked, what is the best stablecoin to use? And my take is that if you're using TUSD, trust token, USDC, which is Circle, USDP, or I don't remember if it's USDP or PUSD, which is Paxos, they're all basically the same from a risk perspective because they're all holding dollars in a US bank. They're all regulated by state regulators in the US. They all have to maintain 100% reserves and are subject to government audits. So you're really not going to go wrong with any of those. And so they're all stable. And again, I've said this to you before, I hate the phrase stablecoin because from an exchange perspective, they're not stable. Meaning if you go to any exchange or go to Abra's app, you'll see a price difference between USDC and true USD. Right. And that's not a function of the value of those coins. It's just a function of supply and demand. Meaning if any one moment more people want USDC because they're using it for some DeFi application and less people want true USD, it might drive down the price of true USD. Right. Or if the supply of true USD is limited and more people want it, it might drive up the price. That has nothing to do with its stability versus the dollar, because you can always go to the mint, the company itself, and get the exact amount of dollars out if you have an account with the mint. All right. Okay. I think there was some more questions. Let me talk about CPerks for a moment, and then you guys chime in if necessary. Somebody asking about the 375 million. I don't know if that's the exact number. I don't track that personally. We have others in our ops that do. I know that we have Abra's wallet of CPerks, and we have omnibus accounts for individual CPerks holders at Abra. Those will all be moved off of Bittrex in the coming weeks to our own custody system. And so there's nothing nefarious there. It's just the combination of individual consumer accounts. Please remember, the vast majority of CPerks held by individuals today is being staked in Abra Earn. Okay, almost all of it. I'm referring to CPerks that hasn't been given out by Abra or is not being held by the Crypto Banking Alliance, and they have their own custody system. That is all on Bittrex today, as far as I'm aware, all of it. That's all being moved off of Bittrex to our own custody system in the next few weeks. Okay, so that's all it is. So you don't need to ask any more questions on that. There's nothing nefarious going on there, and Abra is managing that. And as part of the trading system upgrades, it will be moved. A lot of people asking about listings. Still lots of listing discussions going on. I think I've told you I've tried to integrate myself more into those discussions now to help out. And I can tell you there are several exchange discussions going on. Given the craziness in the markets, it's actually slowed things down a little bit. But I am working on it with the Crypto Banking Alliance team. They are responsible for it since they're the issuer of CPerks. And an exchange doesn't need our help, by the way, to list CPerks. They don't even need the Crypto Banking Alliance. It's a decentralized crypto smart contract. They can list it anytime they want. We just push them to do it because it helps all of you. So, and again, CPerks Army, we need you out there. Be friendly, but be firm. It's okay to remind our friends at Binance, at OKX, at Coinbase, and KuCoin, all of them. We want them to list CPERCs, and please, again, be friendly, but be firm that we really want them to support this, and that they should support this because it's going to be huge. We think with the American Express partnership, the product launch there, some of the other stuff we're working on, integration into some of the trading stuff we're working on, some of the stuff Crypto Banking Alliance is working on, that CPERCs is going to be one of the most interesting projects out there over the next couple of years. All right. Okay, guys, well, I don't know if you have anything to add while I'm looking at the question list here.
Yeah, no, basically you've covered almost all of it. I would just add, I mean, I've usually talked about it in the past shows as well. The idea is that CryptoPerks is still our utility token of choice, right? And what we're working on, what the team is working on right now, as we've said in the past, is the next generation of Abra Perks, which is our rewards program, at the core of which lies CryptoPerks. And it is our full intention that anything that we do on Abra, any product launches and any existing products that we have, trade on and borrow, CryptoPerks is going to be at the core of it in terms of powering its utility. It's just that we haven't yet figured out exactly how we're going to use CryptoPerks, and that's what the team is working on. We tried a bunch of stuff in the first iteration when we launched it first, and we had a lot of success, but a lot of learnings from it as well. And so that's what the team is working on. So absolutely, I want to assure you that CryptoPerks still remains the utility token of choice for Abra that will power everything that we do. Every product launches that are going to happen in future, CryptoPerks is going to be at the core of it. We just need to figure out, what that structure looks like, and that's what the team is working on. So I'm very, very excited about what's about to come. But it'll take some time.
Yep. A couple other questions, valid questions here on CPERCs. While I'm teeing these up, Toby asked, do we pay interest on ETH2 staking weekly, like interest earned in the normal crypto lending model?
I think I'll have to double check. Let me get back to you on that.
Okay. So maybe we'll get an answer from the dev team before the end of the show here in the next few minutes. So a couple of questions on custody and what's happening with exchanges and why people should trust Abra custody. And then a couple of other questions on CPERCs and liquidity. Tyler had a question on how is the price of CPERCs determined on Uniswap? Do sellers set the price? So Tyler, it's an order book, right? It's a decentralized order book. It's an automated market making system. And basically, it's no different in terms of setting price with buyers and sellers on an exchange. And basically, you have a group of buyers, you have a group of sellers. A buyer says, I'm willing to buy this much for this price. The seller says, I'm willing to buy this much or sell this much at this price. And eventually they match. And at any given moment when they match, that's the spot price in that given moment, plus the amount that was sold at that spot price. Always keep in mind that whenever there's a sale, there's also an amount attached to that sale. So just because the price in this moment, or a chart says the price in this moment is 21,000, that doesn't mean you can sell 1 million Bitcoin in that moment for 21,000, right? Selling more than the spot price will usually drive the price down, and vice versa. So the price is only fair insofar that that's what the market is willing to buy or sell at in that given moment for that volume. So hopefully that makes sense. And then there was another, why isn't Abra supporting liquidity on CPERCs on Uniswap? And so I'll answer that. Look, Abra is not a market maker. We didn't issue CPERCs. The Crypto Banking Alliance did. Our goal is to create huge utility and value in CPERCs not for speculation, but for actually using it, which I suspect over time, no guarantee, but should drive up the price, right? It's not my sole goal in doing that. I actually want, and for me, it's partially a test, but I fundamentally believe that we can create an ecosystem, where we can create this new token with our partner at Crypto Banking Alliance and provide utility around it. That's our goal. That having been said, I can see where others could make money as a market maker providing liquidity into Uniswap, and I hope the market makers out there do it. It's not our business, but I hope others do it. Okay, so hopefully that answers that question. There was take a couple more questions. Sorry, guys, I'm monopolizing the questions here, but a couple of questions on custody. How is Abra's custody safe? And why should I basically use Abra versus cold storage? Deepak, you want to take a stab at that, and then I'll chime in.
Yes. Sorry, can you repeat the question? Sorry, I was just trying to get it.
Why should I custody my crypto at Abra instead of using cold storage?
Right. Yeah. So if you've ever self-custodied any crypto using wallets such as MetaMask or Coinbase's DeFi wallet or any of those other competing products, you know that it is hard. Creating the wallet, having your passphrase, managing your keys, making sure it's secure. A lot of folks do it. I do it myself as well. But it is hard. It is really hard if you don't know what you're doing. There are a lot of ways that you can end up losing your money. And it'll be too late before you know it. And once it's done, it's done. There's no going back. And so, so services such as Abra, at least what in my opinion, what we do is hide the complexity. You don't need to know how to manage your keys. You don't need to know what software to install. You don't need to worry about, are you getting phished? Are you interacting with the right protocol? Is the protocol a scam? Things of that nature, right? So you don't have to worry about those things. So you get a very high level of curation because it is our job. There's literally teams of people here whose job is to make sure that we are being as safe as we possibly can with your funds as it relates to lending or DeFi or whatever it is that we do, right? So it doesn't matter. Basically, the point is that we're way more sophisticated than an average user when it comes to protecting your funds. And so that's the peace of mind that we deliver. And so, with any complex technology that you've seen in the past, it starts off being something that, the barrier to entry is very high and only a very small subset of people use it. But then there comes along companies that make it more, they reduce the barriers to entry and more generally people can start using it. And that's when it receives mass adoption. And that's what I think, Abra's role in this equation is that we reduce the barriers to entry to a point that anybody can come in and participate in this asset class. And so anyway, that's a long-winded answer to your question perhaps, but essentially we're in the business of delivering peace of mind is what I would say.
Absolutely. And I would also add, I completely agree with that. And I know we get a lot of questions into the support team on this, but I also feel that, we have a lot of security experts at Abra. And I know more people every day who tell me I use MetaMask and I didn't realize what it was actually doing, and I lost my keys and I lost my crypto, or I have an old version of Ledger and I don't know how to get my crypto off, or I lost it in my move. And look, as somebody who's been doing crypto when it was still cryptography and dealt with public-private key management back in my Netscape days, I don't even want to, I'm embarrassed to say how long ago it was. I've been doing this longer than anyone else I know. Anyone. Okay. And I can tell you straight up that this is not for the average consumer in terms of managing their own keys. I know a bunch of you are going to jump on me like you always do, and that's totally fine. I get the reason why. But I'm telling you, for the average consumer, they are not yet ready via the existing user experiences out there to manage their own keys. Now, that having been said, related to this topic, somebody also asked the question, when is Abra going to support NFTs? Now, it turns out that the answer to that question is actually related to the other question about key management. There is a new technology available called MPC, multi-party computation, which actually, to a certain degree, addresses this issue because it allows us to have individual wallets, right, where you can take custody, where they're not pooled funds, so you don't have centralized hacking, which is super interesting. And we can basically make those wallets available to you now in the Abra app, right, without you having to do key management on your own. And we published a blog article a few weeks ago when we announced both the American Express card and NFTs, talking about this. And we're going to be adding more DeFi options, more NFT options for checkout, and other things that take advantage of this MPC wallet technology over time. But I actually believe that this is the future of Abra, and I think you're going to see more and more capabilities in Abra for taking advantage of this new technology. And I wish I could easily find the blog, but we have so many articles on our blog page, I couldn't find it very quickly. Maybe one of you can find it and post it in the chat. So
I want to say just really quick, I was looking for this number. This was back in 2021. There was a New York Times article that said that at that time, 20% of all Bitcoin in existence at that time was basically lost or irrecoverable. And these are all, when they say lost or irrecoverable, is because people who've used their wallets to custody these BTCs for some reason or the other, many of which Bill just pointed out, they just forget. They don't know how to recover it. They forget the passphrase, they forget the keys, they change their computers, they have software upgrades, any number of these different things can play into it. But that's a scary number. 20% of all Bitcoin in existence by Jan 2021 were lost. And so we don't want that to happen, right? And so that's where sort of I think, service like Abra comes in. And just really quick, going back to the question on ETH2. So the way it works is, this is true staking, right? As we pointed out earlier. And so you will get the rewards or the interest that you see on your app only post-merge. So you will see it accrue, but you're not going to get anything as you would in your interest earning assets. You're only going to get the interest accrued on ETH2. These are basically reward. That's not interest, it's rewards because you contributed to securing the network through staking post-merge. And so this is basically a locked asset until the merge until basically some amount of time passes post the merge.
Yep. Great answer. Okay, so let's see. I'm getting some nice comments about the risk management discussion. Look, we've done this multiple shows. I had our head of risk on, our CFO on. I'm sure that most of you don't want to spend your weekends watching old episodes of Money Talks. I know I don't, but this is an important topic. The shows are there. They're labeled clearly. Go back and watch them, share them with your friends. We take this seriously. We put a lot of time into this. A lot of prep work goes into this, and we do it to be as transparent as we can and address the risks head on and educate the public head on. Somebody was asking me about Voyager and why Abra won't have the same issues. Let me also address that. And by the way, I don't. My team probably won't like me saying this, but we are working on a potential process to help Voyager and Celsius customers who have their funds locked to get them unlocked and moved over to Abra. I know there's no way to move you to the front of the line that I'm aware of, but we are working with a couple of law firms to get feedback on how we can potentially help you in that process. So if anything comes of it, I'll let you know. And no guarantees. And I know we're over here, so I always think that the show today is going to be shorter than normal when I look at the show notes, and then all of a sudden it goes on 70 minutes. So, June, you were asking about Voyager and their Chapter 11 filing, which pains me to no end. This Chapter 11 filing, basically, you can work backwards from Anchor Luna, right, which went bust, to a company called Three Arrows, which is a hedge fund based in Singapore, which went bust because they had massive levered exposure to this. And then Voyager, who basically put hundreds of millions of dollars of their customer money into Three Arrows, so you had a cascading effect. And of course, when all of that money evaporated, they didn't have assets on hand to be able to pay withdrawals. And so they were effectively insolvent. As I explained to you during our risk management segment, Abra does not make those kind of risky bets where we have that kind of concentration risk, right? And so, it's a core tenet of what I've been talking about. You can go back to, I just tweeted something yesterday that I had said back, I think it was in January or February, which was months before all of this nonsense started, months. I said my prediction was other companies in this space are eventually going to fail because they have poor risk management processes. I didn't want to say it. I didn't make it up, but it's the truth. And unfortunately, it happened even faster than I expected. Okay. And so we are fully committed to this not happening at Abra, and to all of the risk management processes that I described, and also making direct DeFi opportunities available to you so that you can actually make your own investment decisions, such as ETH staking, where Abra is not doing any lending. Okay. And we're going to make more and more of those DeFi opportunities available. We're going to curate a bunch of them at first. And then eventually what I want to do is have a full dApp browser. The challenge with that is the user experiences are pretty crappy, right? Whereas with Abra, we have a great user experience. Okay. All right. So many more questions. I'll look, standard show done. I'll take some more questions. So if you want to stick around, I don't know, Tanner, Deepak, if you guys have other meetings, you're welcome to stick around. A couple other questions I'll take, and then we'll call it a day. I know I've got folks waiting as well, but it's all good. I'll let them wait. Let's see. Mark's asking who are the riskiest firms in crypto right now. I mean, look, I think a lot of these other lenders have the same poor risk management processes as Voyager and Celsius did. And honestly, Abra is, I hate to say it, it's not just an advertisement. It's because I've been talking about this for so long. Abra is the company that I trust. I don't trust, I would either be using Abra or hardware wallet. That's for me personally. And I would probably be using the hardware wallet with direct DeFi investing. And I would rather do it with Abra because it's so much easier. I've talked about NFT sales that I've missed because I don't have my MetaMask / hardware wallet / laptop available 24/7, but I always have my smartphone. And if I have all of that stuff in my Abra app, I really trust it because I know how the security at Abra works. All right. So good question, a hard question, not something that I wish had that answer today. But it is the truth. And somebody asking about Amex benefits, Deepak, you want to talk about that? Is there any benefit if I get Amex Abra card rewards as C perks?
Is there any benefit if I get Amex card rewards in crypto? The team is looking at it. We definitely will support C perks as a way of paying out rewards, but we're looking at supporting other currencies. as well for payouts. Now, remember, there's a distinction here. I'm only addressing the payouts issue. So basically, you get CPERX in your wallet. You can almost instantly trade that to any of the other 130 plus crypto that we support in our app. So that is available at any time to you, right? Like so no problems there. What I'm addressing is that in terms of what currency we would use to pay you out those rewards, it definitely we're going to support CPERX, but we might actually support one or two currencies outside of CPERX as well. And so there's no, I mean, well, the benefits again is this goes back to the fundamentals where you're getting rewards back in an asset as you see it, right? Like if you look at crypto perks as an asset or BTC as an asset or anything else as an asset, you're getting your rewards paid back in an asset, and it just depends on you what you want to hold. If you are call it bullish on crypto perks and you want to keep holding crypto perks, then there you go. You don't need to do anything and just holding crypto perks. But if you're more bullish on BTC, whatever it is that you want to do with those with your rewards, you can convert it instantly to that particular asset and hold it or whatever you want to do. And so the benefits really is a function of where you are comfortable holding your money in. But we will support crypto perks for sure. But I think we might end up supporting a couple of the currencies outside of CPERX as well in terms of the payout currency.
Yep. I know we haven't guaranteed this and there are no promises, but I could also imagine a scenario where we're paying higher rewards in CPERX than potentially like Bitcoin or Ethereum, for example, or USDC,
for sure.
Or potentially promotions where you get incremental CPERX on top. Again, we're playing with the models and we'll have, more to say soon, but this is Bill speculating now as a user partially, in addition to being the CEO. So I get to speculate sometimes too. All right, guys, we're going on 70 minutes. We're all late for whatever it is we're supposed to be doing after Money Talks. I think Tanner has to go shave, and I have to go take a supplement to actually get something to grow. And beyond that, I don't know what's going to happen. So I was supposed to say this sooner. So it's a kind of a reward for those of you who stick around. We've got a special guest next week. Raul Paul will be joining us on Money Talks. We've been working to get the schedule for quite a while, and I'm super excited that it's finally happened. And so Raul's become a trusted friend and to Abra, and we're really excited to get him on. And I was listening to his interview with Sam Bankman-Fried this morning, where they talked about tokenized equities. If you haven't checked that out, it was really, really good. Okay, so tune in for that, and hopefully, as I said, the contagion is done, and Red Bull, we'll get Julian back on as a guest. I talk to Julian a couple of times a week. A little difficult with the time difference. Julian is all over Europe, and but he would love to do it again, and so we'll get him on soon. I prefer to get him on when we have some updates on the exchange front, but obviously all of you are going to help us in the CPERX Army by going out there and reminding all of our peers in the exchange world that they should be listing CPERX ASAP. All right, I'm tired. And it's only 10 a.m. here. So all of you have a great weekend. Thanks for joining and your patience, and we'll see you next week on Money Talks.
Thanks, everybody.